Almost all investors, certainly if you've done it for long enough, will realize that there can often be a bit of an emotional roller coaster through it. And you're not about to get an emotional roller coaster from a book on investing. You need to actually, have some skin in the game, go poorly and then get better, and then drop. You need to go through those types of cycles.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to today's show on Wealth Strategy Secrets. Today's guest is Alex Felman. Alex is an entrepreneurial professional currently on his fourth startup venture. He runs the Felman Family Office and collaborates with family offices globally. With a BA in molecular toxicology and bioentrepreneurship from UC Berkeley and an MBA from Copenhagen Business School, Alex advises on biotech, healthcare, and innovative technologies to ensure long-term wealth through innovation. Leveraging his extensive experience in the family office industry and his 20-year background as an educator, he founded Exponential U, an educational program designed to help families achieve multigenerational sustainability. Hope you enjoyed the show. Alex, welcome to the show.
Dave, it's a pleasure to be here, a pleasure to be on the show. I'm excited to have a conversation with you.
Yeah, really fantastic, Alex. Appreciate the opportunity for you to come in and spend some time with us and the listeners. I think people are going to get a ton of value out of this and really understanding, your philosophy, your mindset, really how you think about wealth, what you're doing today, trying to help others, I think is a really cool mission and everything. So why don't we start a little bit with your background and kind of tell us, how you got here, how it all started for you.
Awesome. Yeah. It's been quite a long journey. I'll let's say shorten the beginning part and then kind of expand on the stuff that jumps into kind of exactly where I am today. But originally, I'm originally an American from New York City, grew up there through high school. Once I graduated high school, I went to the other side of the US and did my undergraduate in California. Out in UC Berkeley. Originally in my background and a bit connected to some of what I'm doing now was actually, I really thought I wanted to be a scientist. And I was working in labs and doing all kinds of cool stuff like that. But within the course of my degree, I got a little bit disillusioned. So I decided to kind of take some time off, leave the country and then become an expat. This is 2009. So at this point, 15 years ago, with the idea of like, this is going to be a short-term 1 to 2 year, 2 to 3 year thing. To a certain extent, I haven't looked back. It's continued till this day. So initially spent some time traveling the world, primarily using kind of teaching English and other odd job type stuff to support myself. But I think really the pathway I'm on now started around 2011. At that time, I moved to Brazil. And about 6 months into being in Brazil, kind of two things fell in my lap. On one side, I joined a local financial advisory firm in Brazil, doing a lot of kind of private wealth, a lot of offshoring, a lot of kind of tax efficient strategies. At that point, I was pretty much doing cold call sales. If you've ever seen a movie like The Boiler Room or Wolf of Wall Street, not necessarily any different than that, especially like the early scenes when they're kind of in a garage and all that kind of stuff, not all that different from that. And then in parallel, friends of mine from Berkeley actually started an app company. And I started managing their operations for Latin America. And so that was kind of my initial dip of my toes into tech and into the kind of VC finance world. And that kind of continued gradually and kind of in parallel. My family has a family office that started in roughly the year 2000, where we have both our own single family office as well as a multifamily advisory firm. And I'd say starting around the same time, the family office started getting more and more into biotech and kind of deep tech areas. So started drip feeding me different deals and being like, hey, what do you think about this science? We really don't understand it. Let us know. And then pretty much in 2014, and this is kind of where we're now really started, I was living in China, kind of got sick of living in China, moved back to the US, didn't know what I was doing at all, went back to New York and pretty much almost right off I step off the plane, my dad asked me, well, what are you going to do with yourself? I go, I don't know. And he's like, well, I'm putting you to work in the family office. You're going to be essentially a biotech analyst full time. And then I started doing that. And then that starts 2014. So what's that, 10, 11 years ago at this point. From there, it really kind of led me on my journey today. Within 6 months, I kind of noticed some gaps in the market within biotech companies, both on the company side and the investor side. And that drove me to decide to go get my master's in kind of the crossover of science and business. I like to say it's kind of a master's in how to commercialize science. They had a specialized program at the Copenhagen Business School, which was one of the few programs that was kind of that combination and that balance between kind of an MBA and kind of a master's level science program. Applied, got in. So I moved to Europe in 2015. And then on the family office side, essentially, once I moved to Europe, I started up the European branch of what we do. So been running the European branch of our family office since 2015, as well as kind of really focused only on kind of tech and venture and innovation investments. We do other stuff as well, but anything that's more tech innovation oriented, that's really in my wheelhouse. But let's say even as I transitioned into the kind of the family office private wealth space, I still continue to do stuff as an educator in the education space, but now shifted more towards entrepreneurship, more towards investments, in particular doing a lot of stuff in emerging markets and emerging ecosystems. So like Africa, Middle East, Eastern Asia, Eastern Europe, et cetera, and continue to do that through various things like accelerators, through government programs, through doing public speaking. And in essence, kind of wrapping this up, and I'll allow you to kind of dive in on any piece of that you want to kind of double click on. In the last year, actually, technically, I started this initial idea in 2017 was to kind of merge my two backgrounds of being an educator as well as being someone in the family office space, but in particular, it's kind of the next generation within a family office. You're probably quite aware that within family offices, there's kind of an issue with generational sustainability. Within family offices, what they found is that going from Gen 1 to Gen 2, about 80% of families fail. If you go from Gen 1 to Gen 3, that ups to 90%. So only 10% of families make it past the third generation. And using this and kind of using my experience of actually kind of doing it within our structure, and then kind of with my educational background as an educator, I started to devise essentially to try to solve this problem and create programs to really attack, how do we create families that are able to sustain across generations? What are some of the secret sauces? Initially, I started working on this in like 2017 to 2019. That didn't work out for a number of reasons. But last year, kind of picked it up again, got some new people who kind of reignited the spark and the interest in the problem. And I've been working on that since. And the new kind of venture is called Exponential U. And it's really the idea is to help families be multi-generationally sustainable by being timeless titans. And we can kind of unpack all of that.
Yeah, I love that. Timeless Titans. That's really cool. Such a diverse background you've had, Alex. And I know, along my journey, I love traveling and just learning about different cultures, how people do things across the world is always so eye-opening. And you can learn so much and, bring that into your own life and really incorporate that. And I really think it's fascinating as well, the mission that you've taken on, right, with Family Office, and then really tied that to your expertise and unique ability and kind of what you do. But why don't we just kind of level set here with the audience, right? I think, in reality, family offices are quite opaque, right? In general, right? They all operate so differently and everything. And I think many people, if they don't have a family office, are trying to learn about, I think there's a lot of takeaways and things that you can really learn from that. So why don't we kind of begin things with, why don't you talk to us about your definition of wealth and how you really view that, just in a broad context?
All right. So I think there's different things from that question. I think if we're talking about wealth in general, I think ultimately it comes down to, let's say, what resources you have. And there's a number of different ways to define resources, but it's sort of what resources do you have to achieve the goals that you set out to achieve. I think is that realistically, that's what it comes down to. And I think usually, and I think one of the things that the people tend to almost get caught up on is I think people overemphasize the financial side of wealth and kind of financial capital. But there's, there's a saying I really like. Someone says, actually, your net worth is your network, or your network is your net worth. It's sort of the people you know is actually kind of a bigger source of your wealth. And some people call that your social capital. But also you have your health as a source of your wealth, your mental abilities as your source of your wealth. So these all these things that come together. But I think for me, a really big part of this is what outcomes are you trying to achieve? And I think you can kind of build up all these resources. But if you're not really trying to do anything with them, then it's kind of, what's the point? And I think that's one of the things that many people kind of struggle with, or they'll hit a plateau. They'll focus on the kind of financial wealth generating game, and they'll get to a point where, past a certain level, getting more wealth isn't going to kind of materially change your life. And they go, okay, well, what am I doing this for? And I think at that point, you either have two pathways. And one pathway is, there are some people I legitimately think love the game, just love the kind of building up financial wealth for the sake of financial wealth. I don't know, a simple example would be, at least as far as I can tell, I can't say I know him personally and whatnot, but at least to me, it seems like Warren Buffett seems to love investing. Like, it seems like he would be doing that, and he's been doing it since he was a teenager, right? This is what it seems like he was built to do. It seems like that's his passion. He'd be doing it. Seems like even if you didn't pay him for it, right? It just seems like that is his thing. It's sort of, I call it for the love of the game. A story I kind of like, I don't know if you're familiar with this, but Michael Jordan famously had a clause in his contracts that was called, or nicknamed, for the love of the game clause, which basically said the Chicago Bulls couldn't prevent him from playing basketball under any circumstances. He just loved the game of basketball that much that he contractually said, because usually for high level athletes, they put clauses that say, oh, you can't do this sport or whatever for risk of injury, and they want to protect their assets, if you think of it in that sense. But he put it in there, was like, no, I love the game so much that I want a clause in my contract that says I can play no matter what, no matter context, whatever. But I think if you think about it, I would imagine the vast majority of people don't have this kind of natural love for the game of just like, I'm going to invest and make money forever. And at some point when you hit kind of a ceiling, the question becomes, okay, what's next? And I think that's where, for me, it really big is like, okay, what are you trying to accomplish? And I think a lot of people get stuck there. And so I think that's part of the wealth is on one side, it's sort of the resources that you can kind of accumulate and build around you. But on the other side is how do you manage those resources? What are you trying to achieve with them? Because certainly I would say you need to be trying to achieve something. So.
Yeah, excellent. No, I love that really, holistic perspective. And I can remember at points in my journey where it can be frustrating, for people. They might be in a job that's got a certain commitment to it, right? And let's say your compensation is capped, and you're not able to, add to your investing, you can't move things. But when you look at it the way you did with that lens, there's so many other things you could do, right? You could be investing in that relationship capital, right? And creating those new different relationships, right? All the time, investing in those. You could always be investing in your health, right? And that's always going to give you, huge gains. So I've always seen that, right? If you look at yourself as your biggest asset, I mean, that's where you're going to get your biggest return. Right. So there are times that, when you can do that. And also sometimes if you don't necessarily focus on this, this big number that we all think about, right? We all think about, hey, I got to have this number to have whatever, financial security, financial freedom and things like that. But you focus on the process and the building, then the numbers actually kind of fall into place and everything. So I think that's really great that you have a holistic lens, and I think there's a lot of, for people to take away from that. Can you share with us how you've really seen, a family office, your family office, other family offices, how have you really seen them approach the world of investing and the lens that they have on investing, especially in comparison to traditional wealth management?
Sure. I think, let's say, before I answer your question directly, I want to kind of give some context for the audience that I think will kind of help us with this discussion. I think one of the things that I think is always really helpful to think about within family offices is, I think family offices exist on a spectrum. And if you look at the spectrum, I think there's kind of, broadly speaking, two types of family offices at kind of the extremes. On one side of the family offices, you have what I call your financial oriented family offices. These family offices tend to be really, really pushing for financial returns first. And that's kind of their drivers to kind of just keep the wealth moving forward, keep it growing, make sure you preserve it. Generally speaking, at least from what I tend to see, the families who create these style of family offices tend to be coming out of professional service type professions. So think lawyers, accountants, consultants, bankers, etc. And they tend to kind of, I think because they're sort of used to that way of doing things, they tend to basically replicate what they see from your traditional wealth manager, but in-house it into their own organizational structure. And that's like one kind of side of this spectrum. On the other side of the spectrum is what I would call your more entrepreneurial oriented family offices. So these are family offices, generally speaking, who have made their money through some kind of entrepreneurial venture. So they've started a company. That company's become very successful. Either they've had an exit, or maybe they haven't had an exit. They've sold their company, or maybe they haven't sold their company. But their company's generating enough money that they can, build up a second investment vehicle. What I tend to find with those types of family offices is, yes, they care about financial return, but usually they have kind of a secondary return that they're optimizing for. And usually I just call it a form of emotional value. They have basically things that they have emotional connections with, and they tend to try to push those objectives forward, right? And usually through a business context. A simple example would be something I haven't seen, you see it kind of time and time again, would be something like, sometimes with families you'll have kind of a health issue. Maybe a family has died from cancer or something of the like. And then all of a sudden the families will be like, hey, we're going to start making investments into cancer therapies and research, et cetera, because we want to actually cure this thing that has affected us. And we're going to make it kind of part of our mission to really push this forward, so that essentially other families don't have to go with what we've gone through. And ultimately, right, they still want to get their return, but there is kind of a secondary motivation, which is like, actually, we want to cure this form of cancer for our family. And I think in particular, I was reading a pretty interesting Substack recently about how the Democratic Party has kind of lost. You're starting to see a movement of tech people out of the Democratic Party and being quite public. People like Elon Musk, people like Mark Andreessen are starting to lean Republican. And the question was, why is this happening? And I think one of the things that is kind of an ethos of kind of entrepreneurs and tech people is that if we solve people's problems, then people will give us resources for it. That's kind of a pretty capitalist and kind of innovator's way of doing things. And so there is this concept, I think, and I think the entrepreneurial family offices go the same way. If they go, oh, if we get into things that do really solve problems in a real way, then essentially the financial returns will follow. And they essentially see financial returns and financial value as a consequence of solving people's problems on scale. And kind of the bigger problems that you can solve and the more value that you can provide, then you're going to have the appropriate financial returns. And they kind of connect those two things together in a way that I don't think, at least in my opinion, that more financially oriented family offices or financial institutions do. But certainly I think that's very much the entrepreneurial mindset. And I think the families that lean that way have that mindset of like, hey, we're going to solve these problems. And the consequence of solving problems for a lot of people will be that we make a lot of money.
Yeah, it makes sense, definitely, from that entrepreneurial type approach. What are some, any type of advice or wisdom that you can share, given all of your experience and everything that you've seen within family offices? What could you share with other of the listeners out there who are, we have entrepreneurs, we have executives, successful folks, but what are some, unique insights that you could share with how they could start to either change their thinking around wealth, they could accelerate their, either wealth or, even on the wealth preservation or purpose side of things?
So again, I think I'm kind of echoing this a little bit, but I think it's really on two folds. One is to, I think, especially if we talk about the entrepreneurial, right, expand your definitions of wealth and do this more holistic across multiple different kind of variables or different areas of value or capital, and start to think about like, hey, okay, so we do have this one financial, but also, let's do social, let's do health, let's do kind of emotional values. I think that's one. Again, kind of echoing this, I think you need to be kind of intentional with the direction of what you want your wealth to do. I see it as very much another thing of it's a vote with your dollars in essence. And usually they talk about voting with your dollars as like a consumer, but there's no reason not to think about voting with your dollars as an investor, right? It's giving you the ability to kind of decide what's the future that you want to created. And I think you can actually, like, if you start to put a plan together around like, hey, these are the types of things that I want to see in the future. I want my kids to have, my grandkids to have, etc. I think you can actually have a lot more purpose around that, the wealth that you build and how you use it. And I think actually having this purpose actually makes all the other things easier, as well as makes kind of the decisions that you have to make in terms of where you kind of allocate your money, makes them easier because it gives you strong frameworks around, let's say, using the example I did before, is this going to help us closer to curing this disease or not? And you analyze for that, and you can adapt accordingly. I think that's one of the big things as well. I think the other thing too is I mean, people won't say it, but if you want to really talk about the preservation side, it's not necessarily all that difficult. You could throw it into something like an ETF. It'll grow at the S&P. My personal opinion is the S&P 500 is essentially a vote on capitalism. So if you believe capitalism's going to survive, then that's probably going to continue to go up, especially if we continue to print money, which my personal opinion is, with the way the system's designed, we have to. Like, I don't think we're going to stop printing money. And if we're going to keep printing money, asset prices are going to keep going up. Like, so you can kind of use that as a floor, basically, of wealth preservation. But I think it's also, like I said before, I'm a big person about using this for another purpose, use it for something bigger. It's a pretty, I don't know, almost robotic way of looking at your wealth. And it sort of becomes, you'll get to a point where you're going to have more wealth than you can ever spend, unless you're starting to use it to solve a goal, right? And I think that's a big thing about it too, right? Is the goals that you set that can be achieved just for yourself start to run out pretty quickly. And if you get to a certain level of wealth, there's only, I don't know, there's only so many Everests you can climb, so many, fancy steakhouses, so many yachts. You run out of that pretty quickly. But if you start to try to achieve a goal that's outside yourself, those goals can last for a really long time. Right? If you're setting a goal to, I don't know, cure cancer, or I don't know, save rainforests, or those goals will keep you going sustainably. And I think it's really about having a much richer life overall. And I think that's kind of the personal wealth is more around the richness of life compared to the richness of your wallet.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Yeah, that's such a great way to phrase it, right? And just having that fulfillment in your life. And I think that's such a big opportunity for most people because, I believe that the way, wealth is kind of, taught to us. And in fact, it's not really taught to us at all, right? We're only, put into our first jobs that we get, and we get 401ks and some kind of advisor, telling us, hey, these are your options. This is what you can do. Right. But they're not talking about it in the way that you just really articulated, So, that's the opportunity for the audience, for all of us out there, is to always be, thinking in this multidimensional lens, right? How can you drive more fulfillment? How can you drive more purpose in your life? And it's very intentional. Right. So if you start to set your compass in the right direction and then start to head the right way, it's amazing the things that, can really happen. So, speaking, from that perspective, right, what have you seen with what you're doing with Exponential U, right? And trying to solve that problem of, future generational wealth and trying to, minimize the losses and things like that. What are you guys primarily focused on there?
Yeah. So, I mean, we're primarily focused on building educational programs, and I'll get a little bit into kind of how that breaks down in a second. But I think maybe backing up a little bit of kind of talking a bit more about the problem itself. of things that we're seeing is we're noticing that it's kind of a really, really big issue within the market. And we had conversations with about 3,000 to 4,000 different people around the family office space. And we're really trying to kind of reach out and solve this and get from the bottom up from the ecosystem. But some of the things that we found is, for example, only 30% of family offices actually create any form of succession planning and to create a plan to actually spread things over to the future. So 70% are essentially doing nothing and kind of waiting for it to get to the end before solving this problem. We're kind of, let's say, making the future generations figure it out and go to, we built this wealth, or we're kind of managing wealth now. When we're die, that's going to be your problem. So I think that's a really big thing. I think another thing that we're seeing as well is that there tends to be a decent generational divide between, let's say, the people who are managing the wealth now and the people who will be managing wealth in the future. One of the things that they found is, for example, the generation that will be managing in the future, 70% of them say that they're ready to kind of take a larger role in the organization, kind of to take over some of the ownership and leadership responsibilities. Whereas for the kind of current generation managing the wealth, only 30% believe that the coming generation is ready. So there's this kind of disconnect between the generations of where they see the opposite generation in terms of kind of succession. I do also think, as well, as a different part of the problem, not problem, but kind of challenges around this space is, I would argue, starting in around the 1980s, the world has fundamentally changed with the internet and computers and everything around that tech, which kind of started in kind of the 80s. And so you've had a generation which I would call, and maybe I'm slightly biased because I kind of fit into this, but I would argue the millennials are kind of the first generation that kind of rose with personal computers and the internet. And I think that has had a profound change on the way that you need to manage your wealth and how wealth will be created and kept and so on and so forth. But now you have differences between generations, between kind of generations who were before that and kind of had to learn that as an adult, and generations after that who would, they were born into kind of a digitally native world, right? And the millennials are more or less that kind of bridge generation that kind of remember what it was like before and kind of grew up with it to where we are today. And I think one of the big things is within that is there's an opportunity to leverage the strengths and skills of the different generations in different ways to actually make a more kind of robust organization, leveraging both of sort of, let's say, the wisdom and expertise and maybe business insights of the older generation with the technical, online, social media, et cetera, skills of the younger generation. So that's some of the, let's say, the context of that. But then let's say some of the more specifics of our program is we really, really broke it down in under 3 pillars. So we believe to be a timeless Titan, you need 3 things: timeless character, timeless wealth, and then a timeless family office, which kind of roughly breaks down to working on yourself, working on a way to make money, and then working on kind of an organization. So it's kind of yourself, a money generating operation, and an organization. And so we're building kind of concepts around each of those 3 pillars to really help people build or kind of learn what they really need to create this kind of multi-generationally sustainable organization. As well as, I think one of the big things that we saw was that most educational things out there today, I would say 2 of the bigger main problems. One, from a family office perspective, most of these things are being produced by kind of service providers. So banks, consultancies, et cetera. And usually there's a bit of a conflict of interest in terms of, usually these tend to be almost feeder programs to sell other products or services that those organizations have. So they're not necessarily, I see it as a conflict of interest almost, is it sort of, they're trying to bring you into an educational program as a means to sell you something else. There's a bit of a roundabout way there. But the other thing that I think is a really big one is I would consider these 3 areas to be much more, let's say, like trades or crafts than kind of your typical academic subjects. And if you think about like the difference between a trade and a craft and a typical academic subject, if you think of a trade or craft, let's say like a car mechanic or a carpenter or these types of professions, usually most of the learning for these types of professions are apprenticeships, very hands-on, very experiential, not so much classroom oriented, not so much academic. And I think that's one of the issues that we've been having now, is that a lot of our education around the private wealth space is much more academic oriented and not as much experiential, not as much get your hands dirty, et cetera, which I really believe, you can't really learn how to be an investor from reading a book or whatever. You need to go make investments. You need to go through kind of cycles. You need to, I don't know, get burned on deals. You need to have deals fall apart at the last minute. You need to go through the whole thing. You also need to, experience the I don't know if you've necessarily experienced this, but I would say almost all investors, certainly if you've done it for long enough, will realize that there can often be a bit of an emotional roller coaster through it. And you're not about to get an emotional roller coaster from a book on investing. You need to actually, have some skin in the game, have it, I don't know, go poorly and then get better, go better and then drop. You need to go through those types of cycles. And so that's one of the things that we're quite focused on as well, is really integrating this experiential component to what we do. And I would say it's probably, in what we've structured, maybe 40 to 50% of the program is designed to be experiential learning, kind of learning through doing. And yeah.
Yeah, such an interesting way to set it up that way. I've never really heard about that before, and it makes perfect sense, right? I mean, you've got to learn by doing. You can get all the knowledge you want from books or podcasts and all these things, but until you actually take action, right? How is that going to be? And then how about from say even, are you finding the differences between G2 and G3? Are there differences in say core values? Are there differences in maybe asset classes to your point, right? Being brought up in the tech age, are people more interested in getting into say, crypto or, venture or tech, right? Versus, some of the traditional assets and things like that. Where are you seeing some of those big shifts?
No, definitely all these things that you said are true. I think one of the things I do like to say and talk about, which I think is relevant here, is I think one of the things you see is what I call almost, I'm not sure how you're familiar, but coming from the entrepreneurial space, they talk about the innovator's dilemma. And I think you see a bit of an innovator's dilemma within private wealth if you're talking about a kind of a multi-generational family office. For people who don't know, the innovator's dilemma is basically, if you have a firm, they have their products or services that are generating money today, but those products or services might not be the products or services that generate the money in the future. And usually there becomes kind of this tension between, okay, we want to innovate for the future or develop new products or services or whatnot. However, if we do that, we have to take away resources for the things we're building today and are making us money today. And so how do we balance that? And then often what happens for a lot of these companies is that it becomes difficult for you to, let's say you have a product that's making $3 billion and you go, okay, if we take away a bit of money and resources to do that, instead of making 3 billion, we're making, 2.5, right? It becomes very, very hard to be like, oh, let's not make $500 million, but that will allow us to have this new product in 5 years, 10 years, whatever, that will keep us going longer into the future. And then that becomes a challenge. There's a whole book written on it. And I think family offices run into the same thing. It's a little bit different because we're not talking about companies and products, but I think it's sort of, you've made your wealth in a very specific way. And that's how you're used to doing it. And it's doing okay right now. But, industries are changing, and you've seen a lot with how AI is changing industries. That's probably not necessarily what's going to be the industries that make you money in the future. Right. And so then it becomes this balance of like, okay, do I make a little bit less money today so that we can be making more money, or at least be kind of sustainable moving forward? Or do we kind of milk what we're doing today as for all it's worth? And at some point we're going to get to a point where hopefully it's not too late, but maybe we find a way when that collapses. So I think that's one side. On the second side, I think generationally, you're 100% correct. There's a couple of different shifts in terms of what people are looking for. One, to your point, I think tech and ventures is very much growing in kind of millennials and younger, who are kind of going to be taking over these leadership roles. I would say not really all that surprising. Most of them, again, either grew up with the internet and personal computers, or if you're going a bit younger towards Gen Z and further, they're completely digital native. So it would be fairly unsurprising that they would be open and want to do more in tech and venture capital. So that's definitely something that you're seeing growing. Also, you're seeing more, I don't necessarily like the term, but you're seeing more and more interest in things like impact investing, sustainability. These fields, I personally kind of would lump this on just more, let's say, intentional investing, or kind of more investing that has kind of an emotional component to it of, hey, there's specific causes that they want to champion. They want to put their money behind the causes they want to champion. you tend to see that a little bit more on the sustainability side, but you can also see it on the health side, education side. Everyone has kind of different things that they're going into. You're seeing more and more of that. A different thing you mentioned, crypto, I think is quite interesting. You are definitely seeing a rise in crypto in the younger generations. And I do think that it's not that surprising, because I think if you think about what, let's say, millennials and younger have gone through as a generation and what they've seen of the traditional banking sector, I think a significant amount of this generation has actually a severe distrust of the sector. If you look at the 2008 financial crisis, if you look at the aftermath of these things, and you look at, we'll get into the sides of it, but they've seen a sector that is, let's say, not necessarily trustworthy, as well as a sector that almost had no accountability for their actions. And I think because of that, a lot of them are looking for alternative options, whether that being, let's say, crypto, or I know more and more young people are using, neobanks, banks that are completely online, things like Revolut or Wise, or there's a whole number of other ones. And so that's definitely a bigger thing, as well as I think a lot of them are looking for these alternative ways of either banking or investing, or even currency, right? Or depending on how you look at kind of crypto and blockchain currency, or new forms of essentially equity projects.
You mentioned one of the core pillars being character, right? Do you believe that character and core values are one of the real common thread that can help really sustain multiple generations?
I think short answer to that question is yes. I definitely think character and values is one of the things, and I think one of the things that you see is that, say, the transfer of character and values is one of the things that is the hardest for these organizations to do, but also is one of the things that they tend to see is why the organization tends to fall apart. And I think one of the things around it, and the way that I kind of think of it as well, is if you look at your wealth on the whole, it's actually a fairly easy equation. If you're producing more value than you're consuming, then your wealth will go up. And if you're consuming more value than you produce, your wealth is going to go down over time, right? And depending on how big that delta is, that might increase or decrease the speed, but that's kind of the general equation of how this works. So your goal in general should be to produce more value than you consume. And if you look at, especially if you're talking about entrepreneurial families, right? If you create a company like this, then you're generally in the mind of a producer and creator of things. But many of these families, they don't necessarily pass on that entrepreneurialness to their kids. They actually almost try to do the opposite, because they almost go, oh, I spent all this time, energy, effort. I spent, some entrepreneurs are spending 80, 100-hour weeks. I put my entire life into building this business. I don't want my kids to be doing the same thing. I don't want them to have the same kind of struggles that I had to go through to make this happen, which I think on one level, makes a lot of sense. And you want kind of the best for your children, and the comfort and et cetera. But also on the other side, from, let's say, a wealth perspective, then you're most likely putting them in a position that they don't actually know how to produce things. And if they don't know how to produce things, then their balance on that equation of being a producer compared to a consumer is going to be heavily on the consumption side, right? And if you don't, it's in a certain way almost doing them a disservice to not pass on those traits and values of being an entrepreneur and producer and creator to your children, or whatever family members make sense for future generations. And again, I think it's obvious why that idea is there. It's we want the comfort and whatnot for the people around us, but it's maybe not necessarily the best in the long run, right? And there are other downstream problems of that, but I think that's a really big one, right? And I think what we've seen, and one of the things is one of our advisors is part of this 1,000-year-old family office, and I was talking to him about this because in the beginning we were kind of really focused on trying to focus on like second and third generation families as kind of our sweet spot. But I was talking to him about this, and he basically said, like, I think they said his family is 30th generation or something like that. And they said, this is a type of problem that never goes away. It's not the type of thing where, let's say, generation one kind of figures out how to get it to generation two, and that automatically means generation two can give it to three, and so on and so forth. No. Every kind of generational transition needs to, I don't know if I would say necessarily reinvent the wheel, but because the players are different and their motivations are different at each stage of the game, how you make that transition isn't going to be the same each time, right? It's sort of, each generation is going to have their specific motivations, goals, strengths and weaknesses, etc. So the transition from one to the other is never going to kind of match up. And so you're going to kind of have to find a way to, maybe you have some principles, but you need to also apply those principles in a unique situation or a new situation.
Yeah, the dynamics are quite complex. I can really see that, with our family, and just so many different dynamics, agendas, personalities, all those things. And how do you just try to keep that common thread, right, that can pass through the things. I mean, from our experience, values have been one of the most core things that can kind of keep everyone grounded and at the same level. We'll all have different ways of doing things, but if you all can ultimately agree on the purpose, and then have the values to get there. And in reality, right, that's what keeps, great companies going too, right, is having that culture, strong values and everything. But yeah, certainly a challenging problem, and really appreciate all the insights, Alex. This has been really helpful. If you could give just one piece of advice to the listeners about how they could accelerate their own wealth journeys, what would it be?
So I mean, I think the big advice for me, I think it was this is the sooner that you can come up with kind of your goal, your purpose, direction, it's kind of variations of the same theme. The earlier that you can do that, I think the better. And I think it's don't wait and be like, oh, once I hit this certain number, I'll do it. Don't kind of push it to the future. It's once you have this goal purpose in mind, it will start to you'll start to pay attention to things that will push you in that direction. And you'll start to identify opportunities that will open the doors that can help you achieve what you want. You'll essentially start to kind of naturally filter for them. And so the longer that you wait to do that, you're just doing yourself a disservice. So I think it's more important. This is kind of talking about the values and character. That's why I personally believe it's really important to do that work in the beginning. And that's why we kind of start with the values and characters, is like really understand who you are, what you want to do, where you're going, what your goals are, what you're trying to achieve. Start that. And then you can start to kind of, build your wealth around it. And I think you might start to understand, maybe you don't have to be as focused on financial wealth. Maybe it's more actually important to have kind of, social capital and influence and get, people around what you're trying to achieve and your objectives. Or maybe it's more about, maybe it's your health is actually the really important thing. Cause like you said, right, your health is kind of the engine of everything. You are the engine of everything. And if you kind of realize like, if I don't keep this in order, then okay, maybe I can do this for 3 years, 5 years, 10 years more, but then it becomes kind of, game over or you can't keep it up. And so you start to realize like, okay, what is really going to push us forward? And I think that's a really big thing. And I think if you want to go, let's say, connecting my last thought into a recommendation, if you really want to look at these ideas, one book that's been hugely influential for me is a book called Die with Zero. This is by Bill Perkins. He's an energy trader out of Texas. And yeah, his really big thing is kind of to have a goal of actually dying with zero wealth, because realistically, once you die, you kind of give up control of what you do with your wealth. And so his idea is really to kind of push into the present all the things that you're trying to do, and you're sort of better off. For example, let's say you want to donate a whole bunch of money. You're better donating it today than spending whatever, 20, 30, 40 years, building up more money to donate more later. The kind of ripple effects of that. Or if you, let's say, want to give your money to your children, give it to them earlier. They can do more with it. They can kind of go in their direction earlier. Don't wait till you die. Don't make it part of an inheritance. There's also other issues with that, right? And also, make sure that there's less legal issues, and so less family fighting and bickering and risk of it actually going in the way that you want it to if you do it while you're living, because at that point no one can really say anything, compared to if it happens after your death, you kind of don't really know, right? And I think it's a really great thing to remember of if you want things to happen, do them now. The best time was yesterday. The second best time is today.
Yeah, excellent. I'm right in line with you there, Alex. So many good insights that you've shared. Really appreciate that, and I think it helps us all really change the way we're thinking about wealth. That's the most important thing, and to really try to encapsulate that into what you're doing today, and how you can really kind of instantiate that into who you are, kind of like that be do have 100 type of list, right? It's like just really being the person that you want to be. You could be that person today, right? Don't wait for that financial number to be there. Just start taking action today. So really appreciate your time today and your wisdom. It's really been fantastic. Really enjoyed the discussion. If people would like to learn more about Exponential U or connect with you, what is the best place they can reach out?
Sure. I would say the two things, you can go to exponentialu.com, which is exponential-u, just the letter, .com. And I'd say the best way to get in touch with me is on LinkedIn. So it's Alex Felman. I think you're making me double check it. I'm pretty sure it's just Alex W. Felman, I think is the LinkedIn Alex W. Felman, right? Yeah. So it's LinkedIn Alex W. Felman is how you find me. I think those are the two best ways. Shoot me a message. Reach out, and happy to follow up.
Awesome. Thanks again, Alex. Really appreciate it.
No, thank you so much, Dave.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.